Welcome back to Mia Wealth Hub, where we help you make smart money moves. Today, we're diving into the fundamentals of finance every investor should know. Whether you're a beginner or a seasoned investor, understanding the basics is key to making smarter, more confident decisions with your money. Let's break it down. Investing isn't just about picking the right stocks or timing the market. It's about understanding key financial concepts that can shape your investment strategy. In this video, we're going to break down 3 essential concepts: finance for investors, risk versus return, and the time value of money. Trust me, once you get these concepts down, your investment decisions will become a lot clearer. Finance for investors. First up, finance for investors. In simple terms, finance is the management of money, and for investors, it's all about understanding how to grow your wealth over time. When you invest, you're essentially using your money to buy financial assets, stocks, bonds, real estate, or even businesses, with the expectation that the value of those assets will increase. As an investor, you'll need to learn about capital allocation. That's where you decide where to put your money to get the best return. You'll also be dealing with things like interest rates, inflation, and understanding financial statements to evaluate investments. Risk versus return. Now, let's talk about the core principle of investing: risk versus return. The relationship between risk and return is simple. The higher the potential return, the higher the risk. Understanding this is critical for every investor because it will guide your investment choices. Let's take a look at a few examples. Stocks typically offer the highest return potential, but they also come with more risk because their prices can fluctuate dramatically. On the other hand, bonds tend to offer lower returns but are considered less risky since they are backed by the government or a company's debt. But what's most important is finding a balance that aligns with your risk tolerance, the amount of risk you're comfortable with, and your financial goals. If you're saving for retirement 30 years down the road, you might want to take on more risk for higher returns. But if you're investing for a short-term goal, like a down payment on a house, you might prefer safer investments. Time value of money. Now let's talk about one of the most powerful concepts in investing: the time value of money. This simply means that $1 today is worth more than $1 tomorrow. Why? Because money today can be invested and start earning interest, dividends, or returns right away. Think of it like this: if you invest $100 today at a 5% annual return, you'd have $105 in a year. But if you wait a year to invest, that same $100 won't grow as quickly. This is why starting early is one of the most important things you can do as an investor. The earlier you start investing, the more time your money has to grow. To put this in perspective, let's say you invest $1,000 today in an account that earns 7% interest annually. After 10 years, you'd have $1,967. But if you waited 10 years to invest, you'd miss out on all that growth. So, starting early really makes a difference. Putting it all together. Now that we've covered the basics, let's pull it all together. To be a successful investor, you need to understand how to manage finance, allocating your capital to the right investments. You also need to recognize the balance between risk and return, and make sure you're comfortable with your level of risk for the returns you're aiming for. Finally, you need to embrace the time value of money, understanding that the earlier you start investing, the more your money can grow over time. So, if you take these 3 concepts, finance, risk versus return, and the time value of money, and keep them in mind while making your investment decisions, you'll be on the right track to building lasting wealth. It's not just about knowing what stocks to buy, but about understanding the principles that drive your investment strategy. Do you have any questions or want to dive deeper into these concepts? Drop them in the comments below. And don't forget to like, subscribe, and hit the notification bell for more tips on building your wealth here at Mia Wealth Hub. Thanks for watching, and I'll see you in the next video.